Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on Nigeria's Q2 2022 GDP numbers. Last week, Friday, the National Bureau of Statistics published Nigeria's second quarter gross domestic product numbers. The Nigerian economy expanded for the seventh consecutive quarter as real GDP grew 3.54% year-on-year, Q2 2022 versus Q2 2021, but higher than the growth of 3.11% recorded in Q1 2022. Evidently, the pace of growth in the economy remained healthy in spite of numerous microeconomic challenges. GDP tracks how an economy performs and measures the value of all final goods and services produced in an economy in a given period, usually a quarter or a year. Real GDP reflects the actual value of goods and services produced without the influence of price movements. Simply put, the GDP of a sector can be affected by both the volume of goods and services produced and the respective prices. Nevertheless, what's important is the increase in goods and services produced rather than the price increases. Nigeria's GDP report captures 19 sectors, but only 5 sectors account for 73% of total activities in the economy. These are agriculture, 23.2%, ICT 18.2%, trade, wholesale and retail 16.6%, manufacturing 8.6%, and mining and quarrying 6.4%. The non-oil sector, which accounts for 93.7% of Nigeria's GDP in Q2 2022, has been the major driver of growth since the country exited its recession in Q4 2020. The non-oil sector experienced a growth of 4.7% year-on-year in Q2 2022, down from 6.7% recorded in the same quarter a year ago. On a quarterly basis, the non-oil sector also slowed down, following a growth of 6% in the previous quarter. On the other hand, the oil sector continued to face depression for the 9th consecutive quarter, with a reduction in output by 11.1% year-on-year, though softer than the dip of 26.4% year-on-year in GDP in Q2 2021. Based on the contribution of sectors to GDP, industry is 19.4% in Q2 2022 versus 21.5% in Q1 2022. Lost ground to agriculture, 23.2% in Q2 2022 versus 22.3% in Q1 2022. And services sector, 57.4% in Q2 2022 versus 56.2% in Q1 2022. However, the growth rate in the agriculture sector moderated to 1.2%, its lowest in the last 4 quarters, from 3.2% in Q1 2022. The growth rate in the services sector expanded to 6.7% in Q2 2022 from 9.2% in Q1 2022. Conversely, the industry sector contracted for the 5th straight quarter, giving a negative growth of 2.3% in Q2 2022 from negative 6.8% growth in Q1 2022. Our takeaways: 1. Remarkably, 17 out of the 19 sectors expanded in Q2 2022, save for mining and quarrying and electricity, gas, steam, and air conditioning sectors, which suffered negative growths of 11% and 11.5% year-on-year respectively. 2. The underwhelming growth in the crude, petroleum and natural gas sector can be linked to low crude oil production due to theft, prolonged operational and maintenance issues, as well as divestment from international oil companies, IOCs. Nigeria's crude oil production averaged 1.4 million barrels per day in Q2 2022, significantly lower than OPEC quota of 1.8 million barrels per day and the 1.6 million barrels per day estimated in the 2022 budget. This implies that the country did not benefit from higher crude oil prices within the period, while paying huge subsidy bills that affected the NNPC's transfers to the government. 3. The growth rate in the manufacturing sector came in lower at 3% year-on-year in Q2 2022, the lowest in the last 3 quarters due to issues ranging from forex scarcity, high energy prices to power supply shortages. 4. The strong contribution to the GDP and growth of the services sector can be attributed to the impressive performance in the ICT and transportation and storage sectors. However, we observed a slowdown in the growth in the ICT sector, which remains at sub-pre-COVID levels. This was also reflected in the Q2 2022 financial statements of the two giant telcos, MTN and Airtel Africa, which showed a slowdown in the number of active subscribers due to the logistic constraint of linking national identification numbers (NIN) to SIM cards. 5. The use of road transport networks grew as a result of the increase in airline fares in Q2 2022, driven by the high cost of jet fuel and FX-related issues. This may be responsible for the 56.3% year-on-year growth recorded in the road transportation subsector in Q2 2022. 6. Growth in the agriculture sector slowed to 1.2% year-on-year in Q2 2022 due to the start of the planting season, higher fertilizer costs, and insecurity concerns in major food-producing states. 7. While the trade sector sustained its positive performance for the fifth consecutive quarter, FX-related crises, global inflationary pressures, continuous supply chain disruptions, and high custom tariff impacted the sector's performance. We expect the GDP to continue on its growth path for the rest of the year in spite of the myriad of macroeconomic issues. A major distraction for the government and concern for the private sector is the preparation for the upcoming election. While we expect more government spending, though majorly funded by borrowings, the private investors, domestic and foreign, would be wary of making any major investments in the country until 2024, when there will be more clarity about our political terrain. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, and feedbacks, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed.